important. We do have new listeners all the time. So I think it's important that you let everybody know a little bit more about what you do, again, for the new audience out there, as a mortgage broker, what a broker does. So let everybody know a bit about your history. I think that's important.
For sure. My name's Clinton Wilkins. I'm a mortgage broker. I'm located here in Halifax, Nova Scotia. We have offices in downtown Halifax and downtown Dartmouth. I've been doing this for 19 years, and since I've been with our company now, we've done over 6,000 transactions and over $1.5 billion in mortgages. Every day, I always say that I've seen everything, but I see something new. So that's what I think is really interesting about mortgage lending. And I think right now, there's just so many variances and differences. And I think the differences are more than the similarities between lenders and brokers. And it's really so important for a consumer to seek the advice of an unbiased mortgage professional. So I'm glad you're here with us. Mm-hmm. I'm glad that we're able to share the news and, really my opinion on mortgage lending. And, I think it's all about education. I think consumers are becoming more educated, and we are certainly here for it, and we're glad to be a part of the conversation.
Okay, on the education piece, and again, we will get to Bank of Canada, but we got the entire show, so I think it's important. Let's do a little bit of education. I think we could do that off the top.
Sure.
What are some of the big misnomers that you hear people hear, or that people present to you when it comes to your industry and mortgage lending? What are some of the big ones where you go, whoa?
I don't even know where to start. I think there's just so many. I think back in the day, and I think it's less now, but I think they're still out there. I think some consumers think that the only reason that you would go to a mortgage broker when you couldn't be approved by your bank lender. That's not the case. And that's not the case anymore, for sure. The consumers that we're really seeing are, educated. They are looking for that good advice, and oftentimes really kind of the best rate. Although, we're not, so focused on having the very lowest rate. We always want to be fair with customers, and there's just so much variance out there. I think it's really interesting. The other thing that there's a misconception is, if one lender is not going to approve you for a mortgage, you're not going to get a mortgage. There's so many lenders out there in Canada, and everybody's situation is different. And there certainly are some lenders that we deal with as mortgage professionals that we only have access to, that a normal consumer just can't, walk in a bank branch and get. So I think that's really interesting to really understand. Every consumer, and I say this about every mortgage file, it's different. It's like a snowflake. We look at their income, we look at their assets, and we look at their credit, and then really put together the best possible, financial plan for them based on their circumstance.
Yeah, you guys are kind of full service, because you do have some in-house people who will look at a financial plan. You've got insurance and an insurance advisor in-house, and you do a yearly annual checkup with your clients. And I think that's vital, right? And that's something that not every mortgage broker does, and certainly the banks don't do.
I think that's really what sets us apart, Todd, to be honest. We are biased to our customers. We're not biased so much to the lender. Yeah, we're partners with these lenders, but the way that I look at it is I think we lend our customers to this lender for the period of their mortgage. And when that mortgage comes up for renewal, we love getting back, in and giving them that advice. And that's why it's so important. So many things change in people's lives, Todd. Like people get divorced all the time. Yeah. Sometimes, they have health issues or matrimonial breakdown. So many things change with consumers over, the span of even their mortgage term. And that's why it's so important to, really be involved and do those check-ins. And, the one thing that I will say, and I don't want to, detract from the banks, they're great partners of ours. We deal with many of the banks in the Big Five. But, in that retail banking channel, let me tell you, there's a lot of turnover, and those people only have the products that are available to them. And we need to remember that the number one job for someone who works at the bank is to really return value to the shareholder. At the end of the day, they're not as worried about the consumer. For us, we really believe that we're in that relationship business, and we want our customers to come back. We really pride ourselves on getting 5-star reviews. We have the most reviews of any mortgage brokerage in Nova Scotia for sure, and maybe Atlantic Canada. We so pride ourselves on it, and we really pride ourselves on providing that 5-star experience to every customer. It doesn't matter for us if it's a $100,000 mortgage or $1 million mortgage. For us, we want to make sure that we're going to treat everyone the same, and that's really the most important to us.
And I would bet that there are times when you have somebody come to you who has a mortgage renewal coming up at a bank, and you look at their situation, and your advice is you're going to have to renew with that bank for a variety of reasons, right?
Sometimes it's better for me to send the customer back to the bank than
Right.
it is for us to get involved.
Yeah.
And we don't want to do a transaction for transaction's sake.
Exactly.
We want to do transactions to put consumers in a better financial position. And that's not just about the rate, Todd. Rate is important, but it's not the be all and end all. It's about improving their situation. And sometimes, just based on their scenario, it makes the most sense for them to renew with their lender. And I think for us saying that we're unbiased to, the lender, we're biased to the customer, I think that's one thing that speaks to that. It's, we want the customer to get the best possible, financing for their needs. And sometimes we have to refer them back to their lender. And I mean, that's okay too.
Okay, here's a question for you. We know what's happened with rates, and we will get to the Bank Canada.
Mm-hmm.
We'll do that in the next segment.
For sure.
So let's say somebody is renewing, and they had their mortgage at 1.5% or whatever, 2%, and the renewal is like 5 or whatever it's going to be, and they then will have to deal with the stress test if they're going to not renew with their bank. You may look at that and say, look, you probably aren't going to be able to get a mortgage with us because of the stress test. You should renew. Does that happen?
Not always, because they've actually changed some of these stress test rules that if you're doing a transfer of even a high ratio insured mortgage, we don't have to go back through the stress test again. They've already been stress tested. So on a direct transfer, which we consider a renewal, there are some options for customers to not go back through that stress test. So I think that's really important to understand. The government really wants it to be fair business between lenders, and they don't want consumers to be stuck with one lender, potentially at a higher interest rate,
Right.
just because they can't qualify with another. So, lenders are certainly becoming a lot more liberal, I think, on their debt servicing ratios, especially on a conventional mortgage. So, you always hear to be like, you can't get approved more than 40% or 42% or 44%. We're certainly seeing some more extended ratios specifically for a conventional mortgage. So, under 80% of the, property value in terms of what they're lending. For high ratio insured mortgages, there's still that hard stop that the Canadian Mortgage and Housing Corporation, SAGEN, and Canada Guarantee put in. It's 39 and 44%. So that's pretty much a hard stop for the insurers. But everybody's situation is different. And that's why I think every lender's also appetite is much different right now. And that's another pro to working with a mortgage professional. We've accessed all these different lenders, so we can take all your information and figure out where you can get that best possible scenario.
Yeah, because that would be quite a deterrent if somebody had to stress test again, right? So
yeah, to have the stress test again and for you not to be able to transfer just because of that, to me, I don't like how that feels or looks. We want to make sure that anybody who's up for a transfer, as long as they can qualify, we are going to be able to do it. Really at a renewal situation to be able to transfer between your lender, especially if you're not adding any new funds, we really want to make sure that we're going to enable you to do that. So we're certainly having a lot of different conversations right now. And especially for these customers that are coming up for renewal, we are seeing those customers sometimes deciding to refinance and take, either equity out or a longer amortization. So it's really a case-by-case basis right now. If you've liked what you've heard and you want to learn more, feel free to visit us online at teamclinton.ca.